Today, we'll discuss the top 5 Fidelity funds to buy and hold for the foreseeable future. If you're new to the channel, my name is Fred. Please subscribe and click the bell to be notified of future videos like this. To discover how to develop our wealth slowly and steadily, watch this video all the way through if you want to know what the best Fidelity funds are. I will construct the Fidelity funds I will recommend in this video using the 3-fund portfolio method to guide our discussion. One of the most well-liked do-it-yourself investment techniques is the 3-fund portfolio. Additionally, as implied by its name, it comprises 3 basic funds, usually an equity fund, an international fund, and a bond fund. Therefore, every investment I'm going to suggest today will fit into at least one of these categories. The US Bond Index Fund is the first Fidelity fund you should purchase and hold forever. It follows the Bloomberg Barclays US Aggregate Bond Index, which comprises investment-grade corporate, government, and MBS bonds. Its major issuers are the US Treasury or companies that make mortgage-backed securities, notably Fannie Mae and Freddie Mac. It currently has about 8,430 bonds. Its expense ratio is 0.025%. Therefore, if you invest $10,000 in the Fidelity US Bond Index Fund, Fidelity will manage the fund for you at $2.50. Since the fund's inception in 1990, its average yearly total returns have been 5.33%. What are bonds and why are they necessary? Bonds are, in the simplest sense, loans. In essence, you are lending money to someone when you purchase bonds, to a business or a government body in this instance. And because how they differ from stocks, they are a crucial element of a well-built investing portfolio. This is a good comparison that I like to make between stocks and bonds. Consider equities as your main vehicle for accumulating money. You won't get far without it. Bonds are similar to your brakes. Without it, you run the risk of running off the road. Despite having lower returns, bonds offer less volatility, which helps to smooth the financial ride when you have them in your portfolio. Your bond investments will keep steady and ensure that your trip isn't as bumpy during periods of the market crash, when your stock assets may decline by 20–30%. So as you move closer to retirement age, you want to start including them in your portfolio to assist smooth out your investment ride. Additionally, your primary bond holding should be the Fidelity US Bond Index Fund if you have Fidelity investments. The Fidelity Total International Index Fund is the second Fidelity fund you should purchase and hold forever. The fund tracks the MSCI All Country World Index, excluding the United States. It stands for about 5,042 international businesses. Taiwan Semiconductor, Nestle, and ASML holdings are among the top holdings in this fund. It has a 0.06% expense ratio. In other words, if you put $10,000 in FTIHX, you are effectively paying Fidelity $6 to manage your fund. The fund began operations in 2016 and since then has had 5.99% average yearly total returns. You will have exposure to the foreign market outside of the US thanks to the Fidelity Total International Index Fund. Exposure to many markets, industries, and even currencies. The Japanese stock market's experience can also be a lesson in why holding an international fund might be a good idea. The capitalization value of the Japanese stock market was regarded as the highest in the world by the end of 1989. The Nikkei 225 Index, which measures the 225 largest publicly traded corporations in Japan, surpassed 40,000 for the first time. Sadly, 22 years later, the Nikkei traded below 8,500, which still has not surpassed its previous record high. A Japanese investor still missed the opportunity to buy foreign stocks outside Japan. The US-based corporations presently lead the globe in market capitalization and sales, but who can predict with certainty that this will continue in the future? I myself still have a lot of faith in the US economy and US-based companies as a whole, but I also constantly have to question my assumptions. It would be awful, but the same thing could happen to US stock investors. Larry Swedroe, a financial writer, had a saying, "Never treat the highly likely as certain and the unlikely as impossible." As you become more at ease with the global market, you can begin adding them to your portfolio. And a fantastic choice to represent your overseas holdings is the Fidelity Total International Index Fund. Fidelity Zero Total Market Index Fund is the third Fidelity fund you should buy and hold forever. The investment vehicle follows Fidelity's proprietary Fidelity US Total Investable Market Index. It represents over 2,661 US-based businesses. Apple, Microsoft, and Amazon are the top holdings in this fund. Its expense ratio is 0%. You heard me correctly? Yes, Fidelity Zero Total Market Index Fund requires a $0 investment. The fund was established in 2018. Since then, its average yearly total returns have been 11.82%, hence the zero in its name. The Fidelity Zero Total Market Index product tracks the US stock market because it is a total market index fund. Therefore, having this as your primary equity investment in your three-fund portfolio would be a great choice. There are a few problems with this fund though that I do want to mention, especially when compared to the next two equity choices I'll discuss. The Fidelity US Total Investable Market Index, an internal company index, is one of the reasons. This is essential, which isn't terrible, but the number of publicly traded companies in the US exceeds the 2,661 represented by this fund. The truly minor companies have been taken off of this fund's index. Since the representation is based on market capitalization, it doesn't affect performance in the grand scheme. Therefore, the excluded companies would only account for 1%, maybe even less of the total fund. However, it is worth noting, this market's total is not quite the market's total. The Fidelity Zero Total Market Index Fund's inability to transfer shares to another company without selling your position is a second point to keep in mind. Additionally, you must pay taxes on your capital gains when you sell your interests. The Fidelity Zero Total Market Index Fund was created to attract more clients with a 0% expense ratio. Because of this restriction, Fidelity prevents you from moving your money to another company, which serves as a barrier. Paying 0% is pleasant. However, you should be aware that free things often come with conditions. On the other hand, Fidelity Zero Total Market Index Fund is a fantastic equity fund to hold if you want to remain with Fidelity forever. The Fidelity Total Market Index Fund is the fourth Fidelity fund you should purchase and hold forever. The Dow Jones US Total Stock Market Index is monitored by the fund. It represents about 4,009 US-based enterprises. Apple, Microsoft, and Amazon are the top holdings in this fund. Similar to the Fidelity Zero Total Market Index Fund in most respects, it has a 0.015% expense ratio. Therefore, if you have $10,000 invested in the Fidelity Total Market Index Fund, Fidelity effectively charges you $1.50 to administer the fund. Since the fund's founding in 1997, its average yearly total returns have been 8.29%. Before the launch of the Fidelity Zero Total Market Index Fund, it was Fidelity's first total market index fund. Additionally, Fidelity Total Market Index Fund performs just as its name suggests. Invest in the US stock market as a whole, all publicly traded stocks with US origins. The main rule you want to follow while investing in the stock market is diversity. Many people have a tendency to believe that the only way to succeed in the market is to beat the market, which can be done by choosing high-quality equities or high-quality actively managed mutual funds. Unless you're a seasoned investor with a team of hundreds of analysts at your disposal at all times, when it comes to buying stocks or mutual funds, analysts continuously speaking with and investigating businesses and industries are powerless to succeed. Just too many things are working against the ordinary investor. Therefore, following the market is the best tactic for beating Wall Street and for the cheapest price. And if you want more flexibility than the Fidelity Zero Total Market Index Fund offers, the Fidelity Total Market Index Fund is a fantastic fund to have as your primary holding in the equity portion of your portfolio. Before we look at the last Fidelity Index Fund, if you want to support this channel more, you might want to join our membership program or try our Super Thanks, wherein your comments will be highlighted. Fidelity 500 Index Fund is the fifth Fidelity fund you should purchase and hold for life. The S&P 500 Index, which reflects the 500 largest publicly traded firms in the United States, is what the fund follows. The 500 publicly traded U.S. corporations are represented by it. Apple, Microsoft, and Amazon are the top holdings in this fund. Similar to Fidelity Total Market Index Fund and Fidelity Zero Total Market Index Fund in most respects. Not surprising given that market capitalization determines firm representation and that these large corporations account for a sizable portion of the market overall. It has a 0.015% expense ratio, comparable to the Fidelity Total Market Index Fund. Therefore, if you invest $10,000 in the Fidelity 500 Index Fund, Fidelity will manage the fund for you for $1.50. The oldest of the group is this fund. Since 1988, it has generated average yearly total returns of 10.66%. The Standard & Poor's 500, not the whole market index, is most frequently mentioned when most people speak of the stock market. And the main reason for that is how much older it is. It was established in 1926 and initially tracked 90 stocks before growing to 500 in 1957. It has also been the preferred index representing the stock market for the previous century. Reporters are always talking about whether the S&P 500 is up 50 points or down 100 points when you turn on any financial news program. Based on its market capitalization value, it effectively represents the 500 largest U.S. firms. Although there are over 4,000 publicly traded companies in the U.S., these 500 equities account for between 80 and 85% of the market value of all U.S. stocks because they are weighted by market cap. The index weight is also automatically adjusted based on shifting stock values. The S&P 500 continues to serve as the benchmark against which seasoned mutual fund managers and investment companies assess their performance. Thus, hold Fidelity 500 Index Fund as your primary equity position if you want it to perform similarly to the largest U.S. stocks, which drive the market. However, I must make this point. No matter which Fidelity 500 Index Fund, Fidelity Total Market Index Fund, or Fidelity Zero Total Market Index Fund you decide to use as your primary holding for stocks, none of them leave you with a bad choice. The funds are all excellent. All you need is to be completely aware of what you are purchasing. Guys, that's it. If you want to invest with Fidelity, choose one of the 5 I've listed above and you won't be disappointed. Again, this is Fred, and don't forget to share your thoughts below. Now, did you know that there are 5 dividend stocks that guarantee to pay you a massive return? If you want to know more, click and watch this video here. See you there!